Welcome back to China Price Watch. In today's Money Matters, we're talking about internet finance challenging the central bank. China's banks become worried that third-party payment companies would, or already have, become a serious challenge to them. Therefore, we heard that financial commentator Neil Wenxin appeals to the Chinese government's ban on yuebao because of its damage to the traditional finance industry. However, officials from China's central bank denied the proposal is trying to take down the internet finance industry. As 21st Century Business Herald reports, the central bank said that the new move is to prevent the potential risks of the quick response code. But the statement could easily be seen as picking out a small problem to try and vilify the whole. Data from 360 Internet Security Center shows that due to the widely used QR codes, the number of scam consumers have increased last year. The report indicates that mobile phones can identify the safety of these QR codes when scanning. The Chinese central bank announced that it will suspend payments until the potential security issue has been solved. As many market insiders point out, the fundamental reason why the central bank is challenging the third-party payment companies is they don't fall in line with the government's plans. The central bank used to hope these third-party payment companies should provide services to the less developed parts of the country. However, when the licenses were issued, the central bank realized the best business was still being done in cities with advanced financial infrastructure. The latest case happened last month, when the Chinese IT company Tencent announced they'll cooperate with Beijing Wangfujing department store chain. This strategy would let people use their phone's WeChat apps to buy products. This would eliminate the need for bank cards and all. The Chinese central bank does not rationally want that to happen. This is because without bank card payments, it would use a huge amount of swiping fees from retail stores. Another analyst points to the Chinese central bank's power over the country's cash flow. As 21st Century Business Herald reports, the central bank can easily get all of its cash flow information from cash trading and bank card payments. The central bank can easily monitor all this money through companies, banks, and interbank association, the China UnionPay. However, without cash flow and bank card payments, the third-party payment companies can avoid the central bank supervision. Even if the central bank still knows the total scale of trade through third-party payment companies, it won't know where this money is going. With renminbi depreciation, the central bank should really want to trace capital movement. Many government officials have claimed they support China's internet finance industry during the recently closed two sessions. Therefore, the central bank only said they'll suspend the QR code payments instead of putting out a total ban. This seems like a window that those empowered want to quickly close in order to keep their firm grip on economic controls. Don't go away, because up next for a question of the day, we'll hear Beijingers' thoughts on internet finance. Stay tuned.